What happens when two global economic powers go head-to-head in a battle of tariffs, trade sanctions, and escalating tensions? If you've been following the news, you know that the US is deep into a trade war, and the consequences are already being felt around the globe. From rising costs to disruptions in global supply chains, these trade tensions between the US and countries like China, Mexico, and Canada are setting off a chain reaction that's changing how we buy, sell, and invest. In this video, we'll break down how the US trade wars are affecting everyday life, what the consequences are for businesses, families, and global relations, and why you should be paying attention to this ongoing conflict. From the Trump administration's tariffs to the economic shifts in China and changes in global trade routes, the ripple effects are undeniable. But how exactly is it impacting you? Whether you're buying groceries, filling your gas tank, or simply planning for the future, this economic showdown is influencing your life in ways you might not even realize. According to the U.S. Census Bureau, U.S. China trade deficits in 2019 totaled $345 billion, but trade tariffs have only worsened this imbalance. So, how are these tariffs really affecting your life? Let's break it down. In 2018, the U.S., under President Donald Trump's leadership, started implementing tariffs, taxes, placed on foreign goods entering the country, particularly targeting China. But why? The goal was simple: reduce the U.S. trade deficit with China and force the nation to make significant economic and policy changes. Trump's administration argued that China was engaging in unfair trade practices, such as intellectual property theft and subsidizing its own businesses, which gave Chinese companies an edge over their American counterparts. But when the U.S. started raising tariffs on Chinese goods, China retaliated with tariffs of their own, and the trade war officially began. By 2019 U.S., tariffs on Chinese goods reached $360 billion, a move that deeply affected industries ranging from electronics to automobiles. These tariffs were aimed at pressuring China to adjust its trade practices. But as reported in 2020 U.S., businesses faced an average of 10% higher prices on goods, significantly raising consumer costs. Now, let's look at the impact of these tariffs on consumers and businesses. Tariffs increase the price of foreign goods, meaning that businesses importing products from places like China now face higher costs. This often results in higher prices for consumers. For example, the Consumer Technology Association estimated that the 25% tariff on electronics would lead to a $90 to $143 billion decline in U.S. consumer purchasing power, which directly impacts your tech gadgets and everyday electronics. Take a moment to think about that. Next time you're shopping for electronics, chances are that smartphone or laptop you're eyeing is more expensive due to the added tariffs. So it's not just abstract policy changes. These decisions are impacting your wallet directly. The ripple effects of these tariffs extend far beyond just the US-China relationship. As the trade war escalated, other countries like Canada, Mexico, and even the European Union found themselves caught in the crossfire. As a result, trade relations shifted, global alliances were tested, and new tariffs began popping up in unexpected places. For example, the US imposed tariffs on steel and aluminum imports from the European Union and Canada. This set off a wave of retaliation. Canada imposed tariffs on US goods like ketchup, whiskey, and motorcycles, while the European Union targeted American exports like jeans, motorcycles, and bourbon. These retaliatory tariffs led to losses of over $13 billion in U.S. agricultural exports, with soybean farmers bearing much of the burden. According to the U.S. Department of Agriculture, American soybean exports to China fell by nearly 50% from 2017 to 2019. These retaliatory tariffs caused significant disruptions in industries that rely on these goods, with businesses now having to navigate a more expensive and unpredictable market. But the real kicker, consumers are feeling the pressure through higher prices. Have you noticed that your favorite imports are suddenly costing more? Even American farmers have been deeply impacted, particularly those exporting goods like soybeans, pork, and corn. In fact, Many of them lost major markets in China and other countries due to the tariffs. By 2020, the American Farm Bureau Federation reported a $30 billion loss in farm income because of the trade wars. The trade wars are showing us the true power of global interconnectedness, where one country's policies can have dramatic effects on industries on the other side of the world. With tariffs on Chinese goods increasing and the global supply chain shifting, US businesses are scrambling to adapt. Many companies that depend on cheap imports from China or other countries have had to rethink their supply chain strategies to avoid high tariffs. Some companies are moving operations to countries with lower tariffs or different trade agreements, such as Vietnam, Thailand, and India. In response, companies are also considering alternatives like reshoring, bringing manufacturing jobs back to the US. While this sounds great in theory, reshoring is expensive and often requires a complete overhaul of production systems. And let's be real, these jobs won't magically appear overnight. US manufacturing has been in decline for decades, and rebuilding it won't happen without significant investment. For example, Apple has pledged to move some of its production back to the US, but it's no small feat. The cost of reshoring is high. Reshoring an iPhone would cost an extra $150 per device due to the expense of US labor and manufacturing, as reported by Bloomberg in 2019. Meanwhile, other businesses have adjusted by absorbing the higher costs rather than passing them on to consumers. However, in the long term, these companies may face tough decisions about whether they can continue absorbing the rising costs or will ultimately need to raise prices. The big question is, how much will businesses and consumers tolerate? The US trade wars have shaken up global trade dynamics. As a result, the world is seeing a shift in how international commerce is conducted. Trade agreements are being renegotiated, with countries like Canada, Mexico, and China seeking to protect their own interests in light of growing tensions with the US. But it's not just the US. Feeling the pressure, other countries are increasingly looking to diversify their trade partnerships and reduce their dependence on US markets. For instance, China's Belt and Road Initiative, which seeks to expand China's trade influence in Asia, Africa, and Europe, has become even more crucial in light of the US trade stance. According to McKinsey, China has already invested over $4 trillion in global infrastructure projects through this initiative. This shift means that the global balance of power in trade is shifting, and countries are looking for new alliances that can help them weather future economic storms. In fact, the US share of global exports has fallen by about 2%, while China's share has steadily risen by over 1.5% since 2018. These changes are not just theoretical, they have real-world consequences for global businesses and for you. For example, the rising cost of goods and services from disrupted trade routes and changed global partnerships is beginning to trickle down to the everyday consumer. Did you notice a price hike in imported foods or clothing recently? Let's break down the real-life effects of the US trade wars. Higher costs are already impacting American households. Whether you're buying a new car, electronics, or simply shopping for groceries, the cost of living is on the rise. One area where we're seeing immediate effects is in food prices. For example, tariffs on Chinese goods have caused prices to spike on items like soybean oil, rice, and certain meats. According to the US Bureau of Labor Statistics, food prices increased by 3.1% in 2024, partly driven by tariffs. The trade wars have also contributed to inflationary pressures as US businesses adjust to new global trade realities. In fact, the Consumer Price Index (CPI), a key measure of inflation, reached its highest levels in over a decade in 2021, hitting a 5.4% increase from the previous year, according to the US Department of Labor. Moreover, consumers can expect more supply chain disruptions that might affect everything from the availability of specific products to long delays on delivery times. So, what's the takeaway from all of this? The US trade wars are far from over, and their impacts will continue to reverberate across industries, businesses, and households. Whether the tariffs continue to escalate or the US finds a way to negotiate peaceful terms with its trading partners, it's clear that the US economy is at a critical crossroads. To protect yourself financially, it's essential to stay informed, plan for higher costs, and adjust your spending and saving habits accordingly. Keep an eye on inflation trends and adjust your budget to brace for potential price hikes in food, gas, and energy. The trade wars are a long-term battle, but the short-term effects are already visible. The next few years could be crucial in determining the future of global trade, and how you prepare now will make a big difference. Stay informed, stay connected, and subscribe for more updates as this situation continues to unfold. To high-quality foods, think more variety in Italian wines, cheeses, olive oils, and pasta available on supermarket shelves, often at lower prices due to the elimination of tariffs. Many Canadians who already enjoy Italian cuisine will benefit from enhanced availability and more competitive pricing. Chapter 4. CETA and its impact on trade relations. The impact of the Comprehensive Economic and Trade Agreement CETA cannot be understated. This landmark agreement has reduced tariffs, eliminated quotas, and opened up new sectors for trade between Canada and the EU. CETA has been instrumental in growing Italy's exports to Canada, especially in agri-foods, pharmaceuticals, and luxury goods. For example, the agreement has allowed Italian producers of wine and olive oil to access Canadian markets with lower tariffs, which has fueled an increase in exports. As a result, Italian agri-foods now account for a significant share of Canadian imports. In fact, Italy has even surpassed France in some areas, such as wine exports, thanks to the preferential market access offered by CETA. Italy's total trade with Canada in 2020 was valued at 5.1 billion euros, with key exports including machinery, vehicles, and electrical equipment, alongside food products. Italy has particularly excelled in the luxury goods and fashion sectors, where it holds a strong market position, and the CETA deal has made it easier for Italian brands to enter the Canadian market with fewer barriers. As a result of CETA, Canadians may see more diverse Italian products in stores ranging from food and wines to luxury fashion items and high-end machinery. The reduced cost for businesses importing these goods could translate into more affordable prices for consumers. Moreover, as Italian brands enter the market more easily, shoppers may enjoy a wider selection of high-end fashion and luxury products without having to pay premium prices that typically come with import tariffs. Chapter 5. The food sector and potential for growth. One of the areas where Italy stands to benefit most from this trade shift is the Canadian food sector. Analyzing 2024 market trends, Italy's share of Canadian food imports could increase significantly if Canada imposes tariffs on U.S. food products. Italian exports, particularly in the packaged food and beverage segments, could take advantage of these new opportunities. For example, Italy already has a strong presence in products like wine, olive oil, pasta, and cheese. In fact, the value of Italian wine exports to Canada grew by 11.4% in 2020 compared to the same period last year, despite the global trade disruptions caused by the pandemic. Italy's pasta exports to Canada have also seen steady growth, with a 20% increase of pasta exported to Canada annually. In a climate of increasing global trade instability driven by the ongoing tariff war between the US and China, Italy's food sector is well positioned to capitalize on Canada's need for diversified suppliers. As tensions between Canada and the US rise, Italy could seize the opportunity to further solidify its presence in the Canadian market. Canadians will likely notice a greater variety of imported food products on supermarket shelves, particularly Italian food. With a larger share of the market, Italian products like pasta, olive oil, wine, and cheeses may become more accessible and perhaps even more affordable. Consumers will have the opportunity to explore new products and expand their culinary options, which could enhance home cooking experiences across the country. In conclusion, the evolving trade relationship between Canada and Italy represents a strategic shift that benefits both nations. As Canada seeks to diversify its trade away from the US, Italy is emerging as a key partner, providing access to high-quality products, sustainable technologies, and new economic opportunities. The growing ties between the two countries are positioning them for long-term success, helping Canada to mitigate the impact of US tariffs while benefiting from Italy's expertise in crucial sectors like food, clean energy, and technology. If you found this analysis insightful, don't forget to like, comment, and subscribe for more updates on global trade trends and economic strategies. See you in the next video.